Hi there, so in today's video I'm going to tell you the 6 high yield dividend stocks I invested in this week. So you'll be able to see what stocks I've been investing in. I'll let you know what price I invested in and I'll show you a little bit about each company. I won't go too in depth on it all, it's just be a quick overview so you'll get a quick rundown of each one, what they are, why I've invested in them and what price as well. I apologise I've not been posting videos in a little while. I have been crazy busy. The house upside down. We've got renovations going on, so things aren't even in the right room. You can see my massage chair is in my office right now behind me as well. I've got projects coming my ears. So yeah, I've been crazy busy. But anyway, let's dive right in. Before I do, I just need to say, my name's Andy, and if you're new to this channel, welcome. On this channel, I talk about money and success. If you're interested in making, saving, investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. And if you enjoy this content and find it useful, please do remember to give it a thumbs up because that helps the YouTube algorithm, which in turn helps me, and of course I do appreciate it. So without any further ado, let's dive right in. So the very first stock that I have been buying more of is Main Street Capital. Main is one of my main holdings, no pun intended. I do buy quite a lot of Main. I actually invested in this one at $38.78 this week. You can see here it's currently $40.03, so it has gone up since I invested in it. I investing it at just over 7% dividend yield. So basically, when the price of Main Street Capital dips such that it gives you a 7% dividend yield or more, that is when I tend to buy Main Street Capital at the moment. So that's how that is. This is a monthly dividend stock. It also pays special dividends as well. It's an investment company, a business development company, sorry. So it's a business development company. So it does invest in other companies. It takes a shareholding. I've made videos about it in the past. I'll put a link up there to one of those which will give you more detail about it, and in the description down below. So if you are interested in learning more about it, you can check that out. Let's move on to stock number 2. So stock number 2 is Foot Locker. Now you can see on the screen here, there's a warning. Foot Locker is at high risk of performing badly. Quant rating on Seeking Alpha has it as a sell. Now then, I'm not too worried about that myself. If you were to see, it has had a massive drop, and if you were to look up why it had the drop, you can see the first quarter earnings report fell far short of Wall Street's expectations. So basically, the guys in Wall Street, their expectations were not met with the recent earnings report. But if we take a little look at the financial side of things, which we can do here on Seeking Alpha, you can see this, what I'm showing you here. This is a Seeking Alpha premium account, so that's why I can show you the past 10 years worth. If you've not got a premium account, I am an affiliate of Seeking Alpha. I do get paid if you use the link in the description, but that will get you the best deal that you can possibly get, so you get the biggest discount by using that for using Seeking Alpha. And then you'll also be able to see 10 years worth. Otherwise, you can use it for free and just see, I think it's the past 3 years or 4 years worth, but with the premium account like this, you can see 10 years worth. It unlocks analysis reports and a whole host of other things. So it is well worth it, which is why I use it, and I've been subscribing to it myself for years, which is why I signed up to be an affiliate and now have the special offer price I can offer to you in my description and the pinned comment. So anyway, let's move on and have a look at this. So you can see they weren't happy. However, if we look on a revenue per share basis, it was $43.83 per share back in 2014, and if you go to now, it's over doubled to $90.84 per share. Sure, it's down just a smidgen on its previous 12-month report, but you know what, the general trend has been well up. Personally, I'm very happy with that. I bought Foot Locker in the past when it was this kind of price, and so I'm quite happy with this. I see this as being, they've overreacted, they've dumped the share too much, the price has gone down way too low, it's going to go back up, and I picked this one up actually at $26.65, so it's already started to increase since I bought it. As you can see, it is now $27.11. I think I bought it at like a 6% dividend yield. It's currently 5.9% dividend yield, and the way I see it, Foot Locker's perfectly safe, in my humble opinion. But bear in mind, I'm not a financial advisor. This is not financial advice. If you buy the stock and it goes down, don't blame me, folks, okay? Do your own due diligence first. Anyway, let's move on to the next company I invested in. So as you can see, the next one I invested in was GAIN, which is Gladstone Investment, ticker symbol GAIN. Now this one is a very similar company to Main Street Capital in that it's a business development company. Again, it pays monthly dividends, and you can see it actually performs kind of similar. If I go over here and click on charting, again, this is something you can do with Seeking Alpha Premium, and select metrics, get rid of price return, go to profitability. I want to see the total return, update the chart. Let's go back. I want to add a symbol, and I'm going to add in Main so we can see how it does in comparison to main. So I've updated the chart now, so now you can see the total return, and you can see over the past 1 year, main is killing it at 13.47%, whilst gain has had a particularly bad 12 months. If we look over 3 years worth, you'll see they've performed very similarly. Over 5 years worth, gain actually beats main, and over 10 years, again, gain whoops main. So on the short term, gain is having a bad year right now, which makes it a good time to buy, in my humble opinion. And its dividend yield was nice and juicy at 7.36%. I actually picked this one up for $12.73 per share, so it's already gone up. I've already made a capital gain on this one, as well as picking up what's going to be a nice dividend every month as well. So yeah, I see it as quite a nice buy at the current price. Now then, they've got it as a hold. Fair enough. I bought a little bit cheaper. I decided I was going to diversify a little bit because I've got quite a lot of main. I'm still buying main, as you saw, but I thought I'd add this as well. I see it's a similar type of thing. It will help to boost the income. So next one is Aries Capital. This is another business development company with an even higher dividend yield, 10.22%. I picked this one up actually at $18.29, so it's also gone up since I bought this one. I'm having a good week, aren't I? Not everything's gone up, one of them's gone down, you'll see in a minute. And again, it's a business development company. I think this one pays quarterly dividends, as you can see there. So dividends are paid quarterly, but if you look at the dividend history, you can see it's been increasing the dividends for 2 years. It's got 17 years of consecutive dividends paid, so it never stops paying them. It does do special dividends as well. You can see the general trend is up, and it's gone up quite a lot recently, so I'm happy with that. When I looked at its financials, everything looked in order. As you can see, the gross profit has been increasing. If we look on a per share basis, you can see it's increased, generally speaking, so the general trend is up. Certainly in the last 5 years, it's been going up. So yeah, again, I'm happy with that. So move on. Next one, Owl Rock Capital. This is one I've owned for a long time now. I have been buying more of this recently. As you obviously, hence the purpose of this video, I've bought more of this recently. So I bought this one at $13.54. It's actually gone down a little bit since then. As you see, it's $13.42. So lost a little smidgen on that. Seeking Alpha Quant Trading has this as a strong buy. These ratings, this is something else you only get to see in premium as well. So you get to see the quant rating, which is an algorithmic thing. You get to see the Wall Street rating, and you get to see other Seeking Alpha analysis rating as well. So they've got that as a strong buy right now. It is under book value, so it's $13.47 per share. If we go to the balance sheet and have a little look, you can see its book value per share is $15.15. So I do like to buy this one when it's selling below book value. Sometimes it goes a little bit above, sometimes it's a little bit below. My rule of thumb is buy it when it's a little bit below book value, and I'm getting a good deal then, basically. That's how I see it. It is a super high yield dividend stock. It's currently paying 9.84% dividend yield, so I usually buy it at about 10% dividend yield at the moment. It's not really done a great deal. If we look at its maximum report, it's actually fallen. I actually bought it down here somewhere anyway, so I'm not worried about this high level. I never bought it at this price. And I'm not saying it's necessarily going to return to that price anytime soon, but it might, because if you look, that's 2019, and if we go back to the financials now, look at the gross profit in 2019, 718 million, now 1.3 billion. So it's almost doubled, and yet it's selling for 50% less. Well, go figure that then. Okay, so yeah, that's the way I see it. Good value at the moment. I think it's a good buy. And Seeking Alpha agrees with me on that. So let's move on to the last stock in the list, which is one you will have all heard of, a Realty Income Corporation, ticker symbol O. It's a REIT, so a real estate investment trust. I've made videos about this in the past. I'll put a link up there and the description down below if you want to learn more about it. The quant rating, as you can see, is it's a strong buy, 5.13% dividend yield, and it pays monthly dividends. And the key thing here is it increases its dividends every single quarter. Not by a great deal, but a little bit. So it's one that I see as a good growth stock in terms of dividend growth. Anytime it's below 60 cents per share, it's worth a buy. I bought this one for $60.01 per share. So it's actually gone down a little bit since then. I will be buying more, don't you worry. It's one I just continually keep buying when it's in this kind of range. So when the yield is over 5%, I tend to buy it. That's where I value this stock at, basically. I hope you found this useful. I hope you've enjoyed the content. Remember to give it a thumbs up. Thank you so much for watching, and have yourselves a nice day. Bye bye.